So next we have is motor insurance. So its purpose is to protect against financial losses due to accidents, theft, or damage to vehicles. So its tax benefit is while premiums for motor insurance are not usually tax deductible, and tax incentives may be available for specific types of vehicles such as electric cars. So next we have is the property insurance. So it covers damage or loss to property, including homes and belongings. And the tax benefits, it will, depending on the country and specific circumstances, premiums for the property insurance might be eligible for tax deductions. And additionally, some regions offer tax relief for home insurance if certain energy efficient features are present. And lastly, we have business insurance. So it protects businesses against various risks, including property damage, liability, and employee related risks. And premiums for business insurance are generally considered a business expense and can often be deducted from taxable income, providing a tax benefit to the business. So many tax systems now offer incentives to encourage individuals and businesses to purchase insurance for financial protection. And deductions may be available for the premiums paid, potentially reducing taxable income. And in some cases, the benefits paid out, such as death benefits from life insurance, are tax free. So now, the following, next slide, please. So, the following are concepts related to insurance and taxes that every teacher should know. However, he or she should carefully analyze and critically examine well before pursuing any deal with them. So we have here the employer-sponsored insurance and marketplace plans. So if a teacher is working for a company with a 50 or more full-time employees, the employer is generally required to provide health insurance coverage for its employees. So this is mandated by regulations. And the employer-sponsored insurance plans must meet certain minimum guidelines set by the government. And this includes providing essential health benefits and meeting affordability standards. And teachers should carefully examine the plan offered by their employer because the affordability is a critical factor. And the cost of the employee's portion of the health insurance premium should not exceed to a certain percentage of their household home. So the marketplace plans, also known as health insurance exchanges, and it is available to individuals who do not have access to employer sponsored insurance or other government programs. So these plans are based on the individual's area of residence and income. And marketplace plans come in three tiers, which is the bronze, silver, and gold. And each tier represents a different level of coverage and cost. So the bronze plans typically offer the least coverage at the lowest premiums. The silver plans offer moderate coverage at a moderate price. The gold plans provide the most coverage at a higher price point. So, to avoid penalties, individuals are generally required to have minimum essential coverage. Marketplace plans are designed to meet the requirements. So, teachers, especially those without access to employer sponsored insurance, may explore marketplace plans to find coverage that suits their needs. It is important to carefully evaluate the coverage offered by each tier and consider factors like premiums, deductibles, and co-payments. So next slide, please. Let us discuss more about life insurance. So again, the purpose of life insurance is designed to provide financial protection to the loved ones or beneficiaries of the policyholder in the event of the policyholder's death. So it serves as a safety net to help mitigate the financial impact on the family or the dependents. So how does it work? The policy holder pays regular premiums to the insurance company, and these premiums are the cost of maintaining the life insurance coverage. And in exchange for these premium payments, the insurance company guarantees a payout known as the death benefit to the beneficiaries designated by the policy holder. So there are also types of life insurance, which is the um, term life insurance and the whole life insurance. So the term life insurance provides coverage for a specific term or duration such as 10, 20, or 30 years. And if the policyholder passes away during the term, the death benefit is paid to the beneficiaries. While the whole life insurance offers coverage for the entire life of the policyholder, it also includes a cash value component that grows over time, providing additional benefits such as the potential for policy loans or withdrawals. So, understanding these aspects of life insurance helps individuals make informed decisions about the type of coverage they need based on their financial goals, family situation, and long-term plans. And it is to, essential to carefully review policy terms, compare opinions, and consider one's specific needs when purchasing the life insurance. So next slide, please. Thank you. So the following are common risk categories. So ningon ko ganiha nga ang pagbayad sa insurance or the premiums nga atong gibayad kay is determined by various factors. So, usa na ni siya. So, these risk categories helps insurance companies assess the level of risk associated with each policyholder and set appropriate premium rates. That is why it's essential for individuals to be aware of their health status and lifestyle choices as they directly impact the cost of life insurance coverage. So naa ni siya unom a common risk categories which are the preferred plus, the preferred, standard plus, standard, substandard, and the smokers. So first, the preferred plus. So individuals in this category are considered the lowest risk for the insurance company. They are likely to qualify for the lowest premium rates due to their excellent health and minimal risk factors. So if dili ka masakiton or you are very healthy, suitable kay ka diri nga ang category which is the preferred plus. So the preferred, while still considered low risk, there are slight health considerations. So premium rates ani niya may be slightly higher than the preferred plus but lower than the subsequent categories. So next slide please. Thank you. So we have here the standard plus and the standard. So standard plus, this category indicates a slightly higher risk than preferred. So premium rates are likely to be higher than preferred but lower than the standard category. So in standard, this is a common category and premiums are typically moderate. While not the lowest risk, individuals in this category are still generally healthy and have a normal life expectancy. So next slide. Thank you. So the last is the substandard and the smokers. So substandard. Premiums for individuals in this category are higher than the standard category. The severity of health issues determines the specific table rating and corresponding premium increase. And in the smokers, smokers are guaranteed to pay higher premiums compared to non-smokers. So the increased risk associated with smoking contributes to elevated premium rates. So nasa additional factors which is the age because premium rates are also influenced by age with older individuals generally paying higher premiums due to increased mortality risk and also the health class. So apart from health factors, age is a critical factor in determining premiums. Therefore, older individuals pay more expensive premium. So that's it for my part. Now let us call Mr. Roll to discuss the benefits of life insurance. Thank you.
All right, thank you for that, Miss Nicole. So now let's tackle or dig deeper. What are the benefits of life insurance? Kindly next slide, please. Thank you. So these are the following benefits of life insurance. Top of the list, it pays for medical and funeral costs. Second one acts as a retirement secured conform. Then the third is it covers posts incurred from taxes and debt. And lastly is for financial support and funding various financial goals. So let's start. It pays for medical and funeral costs. So life insurance helps to solve the incurred expenses for medical and funeral services to lessen the grief among family and relatives for being unprepared. So it provides financial support for medical and funeral expenses, easing the burden on our loved ones during challenging times. And the second one is acts as a retirement secured conform. Modern life insurance also serve as a tool that principal holders can use to get in a better financial position in the future, serving as a secure retirement option. So life insurance offers a financial cushion, ensuring a comfortable and worry-free post-career life. Okay? And the third is it covers costs incurred from taxes and debt. So life insurance can serve as a protection since the premium can be used to pay for unsettled debts and taxes. So its coverage extends to managing taxes and debts, offering a safety net to protect beneficiaries from unexpected financial obligations. And lastly is for financial support and funding various financial goals. Life insurance can become a source of temporary income during the difficult period of adjusting and coping with loss of a loved one, especially if he or she is the breadwinner. And life insurance, it offers additional benefits through the form of fund accumulation for specific future financial goals. It acts as a valuable tool for financial support, aiding in the pursuit of various financial goals and providing a source of funding for diverse needs. So again, these are the benefits of life insurance. Next slide, please. All right, thank you. So now, let's dive in on what are the types of life insurance. So we have endowment life insurance. We have next is term life insurance. And we also have whole life insurance. And the very last one is variable universal life. So let's start here in endowment life insurance. When we say endowment, it grants a lump sum after a specified amount of time or upon death. The policy owner is required to pay the premium for a predetermined number of years or until a specific age is reached. So it allows for saving up for specific purposes. It requires higher premiums than other types of life insurance and it guarantees returns upon maturity. So it offers some form of insurance coverage. So combining life coverage and savings, endowment insurance, it provides a lump sum payout either upon policy maturity of the insured's death. It offers a financial security or a cash influx during the policy holder's lifetime. So next is term life insurance. It is the simplest form of life insurance to obtain of which upon death. It is known for its simplicity. Term life insurance offers coverage for a specific period, providing a death benefit if insured passes away during the term. So it is cost-effective option with no cash value, and the beneficiaries are paid with the benefit. Okay, and we also have here whole life insurance. So it provides coverage for the policyholders entire life or until they reach 100 years old. So it acts both as protection and savings mechanism since a portion of the premium allocated to build up cash value. So it is permanent life insurance option. So whole life provides lifelong coverage along with a cash value component that grows over time. So the policyholders can access this cash value or use it as a source of loans. And the very last one is variable universal life. So it serves as both life protection and investment vehicle in one package. So a portion of the premium is allocated into various investment vehicles for the purposes of wealth creation. And the contract's earnings are based on the performance of selected investment. So, offering investment opportunities, variable life insurance, it allows policyholders to allocate premiums to various investment options. So the cash value and death benefit can fluctuate based on the performance of these investment. So these are the types of life insurance. So next slide, please. All right. So now let's get to know what is financial stability since we're done tackling with life insurance, right? And for sure, this will be a good topic. So what is financial stability? So, financial stability is not about being rich, but rather more of a mindset. So, it is living a life without worrying about how to pay the next bill and becoming stress free about money while focusing energy on other parts of life by Silva. So like anyone else, teachers also aims to become financially stable if not today, maybe in the future, right? So being financially stable means confidence in with the financial situations. We're less paying the bills because of available funds, debt free, money savings for future goals, and enough emergency funds. So when we say financial stability, from the word itself, stability, being stable, right? So it means or having a stable or consistent income. It refers to an individual ability to maintain a secure and balanced financial condition over time. So by managing their expenses effectively. Okay? So next slide please. So these are the 10 strategies in reaching financial stability. Okay, so just like any goal, getting the finances stable and becoming financially successful, it requires the development of good financial habits. Okay, so these are the 10 suggestion habits toward financial stability and success. So next slide, please. Okay, so atop the list is make savings automagical. Second is control your impulsive spending. Third is evaluate your expenses and live frugally. Fourth is invest in your future. Then keep your family secure. Six is eliminate and avoid debt. Seventh is use the envelope system. Eight is pay bills immediately. And nine is read about personal finances. And lastly is look to grow your net worth. Okay, so number one is make savings automagical. Savings should be made a top priority. So, especially as an emergency fund and a bill payment from the amount are automatically transferred from the checking account. So, like an online savings account. Okay, so make savings automagical. It involves setting up automatic transfer to your savings account, effortlessly building financial reserves without active effort. So that is make savings automagical. Number two is control your impulsive spending. So you should control yourself from impulsive spending on eating out, shopping, and online purchases that may ruin your finances and budget. So, advice is curbing spontaneous purchases and adhering to a planned budget to maintain your financial discipline. Okay, so the third one is evaluate your expenses and live frugally. You need to analyze how you spend your money. Okay, so see what you can reduce and determine expenses that are necessary and eliminate the unnecessary. So you need to entails analyze your spending habits and adopting a thrifty lifestyle to manage resources wisely. And fourth is invest in your future. So start preparing and investing for your future retirement while still young in your career field. You need to emphasize putting money into long-term investment like retirement accounts. You need to ensure financial security down the line. So fifth is keep your family secure. You need to save for an emergency fund so that you have something to spend if anything happens with the family emergently. So you need to, thinking wise, you should know the importance of financial planning to safeguard your family's well-being in the face of unexpected challenges. So six is eliminate and avoid debt. Eliminate credit cards, personal loans, or other debt forms as it will not work on you but even pull you down and make you drown with obligations that may even resort to surrendering your properties and like jewelry and investment as payment. So you need to advocate for minimizing debt and making informed financial decisions to prevent burdensome liabilities. All right. So number seven is you need to use the envelope system. So set aside three amounts in your budget each payday. Withdraw those amounts and put them in three separate envelopes. In that way, you can easily track how much remains for each of the expenses or if you already run out of money. Okay? So especially it involves allocating cash into labeled envelopes for specific expenses. You need to aiding in discipline and controlled spending. So number eight is pay bills immediately. One good habit is to pay bills as soon as they come in and try to get your bills to be paid through automatic deduction. So I recommend, setting bills promptly to avoid late fees and maintain a good financial standing. And number nine is read about personal finances. So the more you educate yourself, the better your finances will be. And last number is look to grow your net worth. So do whatever you can to improve your net worth, either by reducing your debt, increasing your savings, or increasing your income, or all of the above. So advises consistently increasing assets and reducing liabilities, aiming for long-term financial growth and stability. So these are the 10 strategies in reaching financial stability. All right. So now let's call on the next reporter, which will be Miss Hodaya. Thank you. That's it.
Okay, thank you so much for that wonderful and informative discussion, Teacher Chai. So I hope everyone is still awake and you also listen well because this is already the last part of our report. So we have here signs of being financially stable. Actually, Rose in 2019 presented 20 signs of being financially stable person. So what I did, there are some signs there that are just the same na bitaw kanang same oral thought as well as the quality. So what I did is that I just summarized them and also will be identifying them in which categories of these kanang akong na generalize they belong to. So let's start first. Not living paycheck to paycheck. So what does it mean? So it only means that you are comfortable enough to cover your monthly expenses without relying on your next paycheck and still have some money left over. So the some categories na under here sa kaning definition is that first is you don't worry I'm sorry. First is you pay your bills ahead of time. So since you are not waiting for your next salary, so you could just pay your bills ahead of time and don't wait for the money to come at you. Kay na naman kay a lot na kay enough money para mo pay sa imong basic needs as well as sa imong wants. And next is that next nga category na na-identify sa ARI kay you are in control of your finances and you never dominate by them. So what does it mean? So even if you don't wait or you are not waiting or you are not living paycheck to paycheck, you are still in control sa imong money. You don't overspend, you don't overeat. You're still there making savings and budgeting monies to other things para dili sad ka maka kaya bitaw magamayan na sa imong money niya paano sad ka kung asa na sad padung imong money. And next is that you are you're generous with money when it comes to charities or helping others. So since you since you have your own money and you don't depend on your salary, so every time na someone is asking for your help or ever kanang nabay someone nga ganahan magpa-loan sa imuha or really needing money, so you can just give them that money that they need since you have enough for yourself man. So next is no fear of losing your job. So what does it mean? So it only means that there is always a sense of security you have when you are financially stable and you know that you have enough income to sustain your lifestyle. Should you lose your job and you are confident that you will find another job due to the skills and qualifications that you possess. So um, some some categories that are under this uh, first is the first one is people you don't you don't lose sleep over finances. So since you know yourself now you are skillful, talented, and you do your job really well, so you don't overthink nga, hello, what if ma-terminate ko tomorrow, what will be my job? So you don't overthink what will gonna happen to you because you know how to make your own income by using your skills and also your talent. So also we have here is, of course, you don't worry losing about your job because you always have, for example, if since you have enough money, if you don't have a job, you can just open your own business, right? Or you can just um maybe work another different country because you have the skills that you have already experienced. And next is multiple income streams. So you have multiple sources of income, which can include a stable job, rental income, investments, or a side business. Diversifying your income sources increases financial stability. So for the multiple income streams, as what I've mentioned, here you don't fear losing your job because you know to yourself that you're capable of having one. You may not have a boss, but you can be your own boss. And next is adequate insurance coverage. So here you have appropriate insurance coverage, including health, home, life insurance to protect your assets and mitigate financial risk. So here some of the identifiers that I might get categorized in this sentence is first you use your credit cards for convenience and rewards but never out of necessity. And since you are using your credit cards, as we all know, if we use our credit cards, there will be credits, right? And once you will gain credits, it could be added as your points, or you could use that credits that you've saved in making a payment to other things. For example, if you have enough points, you can just purchase a grocery for that certain amount. And also, if since you have an adequate insurance coverage, so it only means that you have enough savings. So your retirement is already planned. So you don't need to make your children or godchildren pay for your funeral because you know to yourself nga they are already planned. You have an insurance, or for example St. Peter insurance, and you've already paid for that, and you don't want your grandchild or your kids to worry and pay for it for yourself, as well as for your home. If you want to have your own home, you already bought your own house and you can live there, as well as kanang you've been in a company for how many years and then you've saved up some enough money for your health. But as we all know, as we grow old, we really get sick, and our health it gets at a high risk of getting some diseases. So you know to yourself that health is wealth. So of course, you should be covered by the health insurance. And lastly is financial peace of mind. So what does it mean? It means that you experience a sense of financial peace, which means you're not constantly stressed about money and you have a positive outlook on your financial future. Since you are financially at peace, with your life. So there will be a lot of people asking your opinions about financial matters, and you also inspire them. And you are also generally happy with your financial situation because you don't have loans, you don't have any things that is under your mind because they are already at they are already planned and they are already budget on a budget. And and the goal here in life is to always have something to fall back on when you are retired. So we need to get in touch with our financial advisor as soon as possible so that we get the right financial advice and guidance to get on our way of financial stability. And next slide, please. So next is integrating financial literacy in the curriculum. So what does it mean? So it only means that um, incorporating financial literacy in education can equip students with necessary knowledge and skills to make good financial decisions and secure their future, leading to economic growth and prosperity. So, how can we integrate financial literacy in the curriculum? So, we can actually use this, for example, subjects in math, economics, um, science, as well as other subject or technology, and to give them opportunities to practice the financial skills they learn at school. So students can come up with a plan to incorporate financial concepts into the curriculum and classroom management strategy. So for example, you can ask your students to plan a fundraiser for a charity or local organization as a class project, or calculating expenses, making a budget, giving customers change, tracking profit, etc. Can all be a part of this project-based learning experience for students. And also, in support, Barry in 2013 underscored that financial literacy has a wide repercussion outside the family circle and more precisely the school. Hence, administrators and professors need to develop a curriculum that would provide students insights and having the value of financial literacy, including the effect it can bring to them. So having a strong foundation of financial literacy is very important for students. It is because it gives them the knowledge that they need to manage their money wisely, especially at a young age. So that next slide, please, for the quote. Okay, so that's all for my part. And before we end this report, I would like to share to you some one of my favorite financial quotes here. Financial literacy is just as important in life as the other basics. So it means that being financially literate is just as is important with eating food, getting enough sleep, and getting healthy, because being financially literate, it means that you can achieve your goals, everything that you wanted to experience in life, such as you would be able to buy food, have enough sleep because you don't need to work. So that's why at a young age, or as soon as possible, or early in these days, we need to learn how to be financial literate and start the day. So that's all for our discussion for today, and thank you so much, everyone, for listening. Have a good day and stay safe always.